Another point, right, when it comes to children insurance policy, right, I can add another point is there's a fast cash that comes in time of crisis, especially when it comes to critical illness payout. If you insure the children with 500,000, 1 million, right, then the money actually will pay out very fast if all the documentation is done properly, all the diagnosis or the report is submitted completely. Usually took to 5 to 10 working days. And then it's guaranteed. We guarantee you 500,000, we guarantee you 1 million, we'll pay the amount of money. And then another thing is this money is actually creditor-proof. Right?
So
nobody will come and chase you like, okay, you have to pay a certain amount of taxes or anything. So you can do anything with this money. But of course, the priority is to replace the income that lost from taking care of the baby. So is there any significant difference between an education saving policy versus a normal saving plan?
So actually the purpose of the education plan itself is important. So when we are taking care of our children, so the education plan is basically to save for their child education. So it comes with insurance coverage. Of course, once the features of the education plan itself, it comes with the insurance coverage, either the parent life coverage or the payer's benefit. So let's say one of the parent passed away, unfortunately. Death comes to all of us. It's just when. Let's say you're planning for your child for the next 20 years. In the middle, something happened. So at least this plan can take care of your child whenever that plan itself for the 20 years may be achieved.
Actually, I have a case, but the saving plan is not sold by me. It's a saving plan that my client's parents actually bought for him when he is still a young baby. Unfortunately, the parents actually passed away quite young as well. So actually this policy continues to pay for itself until the client become an adult. At that time, he actually wanted to further his study. Right? I've been sharing this story actually many times to many of the parents that I met. Then he got to know about this coverage, got to know about this plan, and then he wished to further his study. We actually cash out the money when he needed the most. He actually take some of the money and actually continue his study, then further his career as an engineer in Singapore. And then he actually, at the same time, actually come up with a bit of deposit for his house, and then he lived comfortably after that. So you see, with a proper planning, right, in the days when the weather is not so good, it somehow secure a child future with proper education saving. And then at the same time, this education savings, it actually comes up with a guarantee payout. Like what you mentioned just now, is actually come up with a guarantee payout at the key education stage. Maybe when the kids reach 18, 20 years old, that's the time when they wanted to continue study. But of course, at the same time, you can enjoy a tax benefit from there, from the parents. And then the next thing is education savings, like what I mentioned just now, is a structure and a lock-in saving. It means that you have to continue to put money inside. You cannot stop. Once it stopped, then everything gone. But it comes with a shorter payment term and saving terms. Because I believe most of the saving plans is a saving up to 20 years, 30 years, especially for the 30 years. So when it comes to maturity, the child already graduates. But education savings have a shorter period, and then you can cash out when you needed it the most. If you talk about regular saving plans, somehow there's a flexibility towards it. It's also can be structural. It's more flexible in terms of withdrawal. And it can come in two types. One is investment link. Another one, actually, I always tell my client, is in a hybrid version. There's a guaranteed dividend or bonus, but they also have an investment return, which is non-guarantee. But this type of plan is guarantee you like either every 2 years or every year, you'll get a guaranteed cash payout. So you have two choices at that time, is whether you want to withdraw the cash or just leave it in the saving plan and let the money continue to grow. And then regular savings plan, it may or may not come with insurance coverage because we have a variety of it. Life insurance, HIBA, and even fixed deposit can be your saving plan. And then they have different rate of returns. It depends on fluctuation of the funds, performance, and the structure of your saving plan. Actually, if put in the words is, what is your goal of doing this saving? So for the regular saving plans, right, it solely depends on what is your financial goal and when you want to reach your financial freedom. Some people treated this as retirement planning. For some Muslim clients, they use this as the funds they're going to use to fulfill their hajj. Because at the same time, the money inside can actually become a hibah. But when it comes to investment linked plan, right, a lot of people think that, or maybe it's life coverage with medical insurance and critical illness. But at the same time, it actually comes with what we call it a saving account. It's an additional saving account which you can actually activate it. It is also structured. You can put in money. It means that every month you have a certain commitment to put in. You pay as normal premium. The second thing you can do is doing the ad hoc top up. Means that like my clients, every year he will put in the ampau money of his children into this investment link plan. That's why I say it is much more flexible. It can be structured and can be flexible at the same time as well.